Yeah, today we shall be looking at the terminologies used in the trading profit and loss account. Without all these terminologies, of course, the essence of the topic is unreasonable. So the terminologies helps us in understanding what we are actually doing in the preparation of the account. Yes, all the information you'll be getting helps you to be able to prepare the account itself, understand its rules, and of course its regulations, all norms and all traditions that you'll be using to solve the problem. Because in accounting profession, all topics has its rules, has its regulations, of course, its methods of preparation. Now let's look at the stocks. Want to talk about the stocks, yes. We'll talk about the stocks. Stocks are categorized into two aspects mainly. We have the opening stock and, of course, the closing stock. We have the opening stock and the closing stock. The opening stock are described as stock that represents the stock at the beginning of a trading period. We call it the opening stock because these are stocks that were actually presented at the beginning of a trading activity. That's why it's called the opening stock. Okay, now we have the other one called the closing stock, which is the opposite of the opening stock. This represents goods unsold. It's called a closing stock because it's a stock that there are stocks that are not yet sold out. There are stocks that has not been given out to the public or to clients or to customers, as the case may be. They are stocks unsold. They are items unreleased. Okay? These are stocks at the end of a trading period. Yes, now that you have understood stocks, category in opening and of course in closing, now let's look at the sales. Yes, what are sales? Sales are, even to a layman believes that whenever he sells something, okay, whenever he gives, he exchanges something in returns, like a trade by barter, he has termed it as sales. A layman believes that, okay, if I buy something and someone comes, if it's a businessman, okay, as the case may be, if I give out something in return of finance or figure, he has called it sales. You will say, I've sold it. He goes to the market, he buys something with the intention of making profits. Yes, because that is the main objective of every business organization, is to be able to earn more profits, expected profits, okay, comparing with, of course, actual profits. You might actually have a particular profit in mind, okay. All of these are compared together. All revenue and expenses are actually compared and um, are put together to be able to assess if the organization was actually a profit making or a motive organization. I'll take that again. Sales here represents sales and, of course, credit sales. But mind you, we do not take the credit sales into our trading profit and loss account. I repeat, a credit sale is taken into a different account. It is part of sales because it's a sales record, but it is not recognized in the profit and loss account because it's on credit. I'm only trying to bring it into your notice. There are two categories of sales. We have the sales, which is the cash sales, and the other one is the credit sales. Now, we talk about the cash sales because cash are actually received. Okay, you have paid for what you have actually bought. That's cash sales. Now, a credit sale is described as a sale that money or monies are expected in a future day or later date. So this one are credit sales, but in all, they are categorized as sales. So in accounting terms, we can have cash sales and credit sales. But reminder, please, your credit sales are not going to be recognized in the profit and loss account. Okay? So just know that every sales recognized in the profit and loss account are the cash sales, so that actual profits can be detected, actual profits can be recognized, revenues can be recognized, all expenses incurred can also be recognized. That's the essence of ensuring that actual is our motive in the trading profit and loss account. Now let's look at our purchases. I haven't talked about our stocks, of course, our sales. Now I want to look at our purchases. What are purchases? Purchases are items you actually acquire or you buy in order that sales might be achieved, or you will sell a particular item you have purchased. Yes, purchases are made so that exchange or returns can be achieved through a purchase of an item. This trading profit and loss account is strictly business, is strictly accessibility, is strictly determination of profits. What am I comparing? Am I comparing my actual results with what I'm expecting? Yes. Now, we're looking at purchases here. Purchases here in this context explains what the organization actually purchased in the period, during the period, in the course of the trading activity. That's it, just that. Let's don't go beyond that. Now, that's part of the terminology you should be seeing in the trading profit and loss account. Then I want to look at the returns. Yes, returns. Goods are returns most times, either by the buyer or by the seller. Now we're going to look at the sales returns or returns inwards goods. When goods are returned, it means that goods are actually sold. Return inwards goods are described as goods that were actually sold by the seller, but were returned due to circumstances, damage, or other reasons. Okay, when goods were sold, it can be returned by the buyer. Okay, yes, can be returned by the buyer to the seller due to any reasons. And this, of course, is going to reduce the sales in the trading concern. Take, for instance, after you have prepared your report, okay, and you have your sales already. Say you made a sales of, say, about 10,000 naira. You have calculated that this was my sales. Not yet a net sales, though. Now, while you have prepared your account and a customer just came and say, oh, I do not like this particular one that I bought, I want to either exchange it or maybe I do not like it. Okay, of course, you know that it's going to reduce your sales figure. Yes, that's what sales is all about. That's what returning what it's all about. It's going to reduce your sales figure. Okay, so where sales are returned, it reduces the sales figure, and there are so many reasons why sales can be returned. You might not want to talk about that now. Now we have the other one called the returns outwards goods. As a customer returns to you, you as a buyer to have a right to return to your supplier. So it's just the opposite of it. Return outwards goods are goods that you are returned to the supplier by the seller, okay, due to circumstances, okay, and these are recognized in the trading profit and loss account. Yes. Then we have the other terminologies in the trading profit and loss account. We have profits. Profit, like I said in my previous class, are in two categories. We have the gross profit and, of course, the net profit. We call it the gross profit because it's a profit that does not involve expenses. It's a profit that only involves the stock of goods, the sales, the net sales, and we have the other one called the the cost incurred in uh, actually acquiring, either opening stock, purchases, and the other one, cost of transporting. Yes, that's your carriage, carriage inwards. Yes, that's the cost of transporting the item, which is very, very relevant in the trading concern. We're going to look at the trade, the return, the carriage inwards, and of course the carriage outwards. But because of this class, we are looking at the returns. Okay, now that you have understood the return inwards, the return outwards is the opposite of the returns inwards, where customer also or a seller has a right to return to a supplier. That is just that. Now we have talked about the profit also. Sorry for taking you back. The profits are in two categories: the net profit and of course the gross profit. The gross profit is a profit you get before expenses are deducted, while the net profit is a profit you get after expenses are deducted. Now we look at the cost, what's it called? The the cost of transporting item, that's carried inwards and carried outwards. We call it the carriage inwards because they are the costs that you are involved in transporting the items, in transporting the goods that were used, okay, that we are going to be sold. So that is why it is added back to the purchases of the goods. Why the carried outwards are also costs that you incurred, okay, in why the carried outwards are described as cost of transporting goods that we are charged to customer. Of course, it's described as an expenses. Now, in our previous class, in our next class rather, we'll be talking about, um, let's look at the terminologies or the format or the layout used in the preparation of the trading accounts and some of the terms I quoted in this class. Yes, now next class, let's see the format used in the preparation of this account. Yeah, good afternoon.